What's going on, traders? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is April 14th, 2021. Please like this video, hit the like button, please, and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to talk about the price action, the indices. We're going to go under the hood and check out our sectors and style factors. We'll talk about some of the trades that I took today. Tried not to be too active for options expiration week. And then we'll wrap up with some options order flow. Before we jump in, quick risk disclaimer, as always, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right into it. You can see here, we had our S&P 500 finish down 0.34% today. We had our NASDAQ QQQ finish down 1.2%. We had our IWM small caps finish up 0.99%. And we had our Dow Jones finish up 0.22%. So you can see pretty mixed day in the markets. And we've been having these sort of mixed days where one day it'll be only tech rallying and the rest of the market is selling off. Then the next day it'll be, the reverse like we had today, tech really selling off, some of the other areas of the market that are really shining. You can see in the grand scheme, this is like the most micro of micro dips out there. So for S&P 500 down slightly, we got a pullback to this 5-day exponential moving average. It is options expiration week, so we've just been in a very tight, choppy back and forth tape. Like if you look here, the 12th would have been Monday. One thing I always talk about is during options expiration week, a lot of times it's really just chop, and you are sort of hurting yourself if you're opening up a bunch of short-term trades and really trying to, overdo it. So if you look, April 12th, we pretty much opened up for trading at the same level we closed at today. So, perfect round trip in a couple days. Yeah, you can see here we're still above all these key moving averages. We are still looking very bullish. And if we get this correction to really just the 20-day simple moving average, we have a few percent to really cover if we are going to do that. You can see here, I'll zoom into the shorter time frames because that's where you'll see most of the action. So you can see here today, we jumped into this daily value area, and you can see, we fell into it later in the session. We tried to retake this daily value area high and kind of failed at it. And you can see now we're trading right around that daily point of control. So this is the first real there's a tiny bit of weakness, in the market, but it's really nothing. If we look at our NQ, you can see this actually jumped below the daily value area. Let's see where we are in the hourly chart. Yeah, in the hourly chart, it does look like a test of this weekly value area high could be in store for us. A lot of times these, key support and resistance levels, they sort of act almost as if they are magnets where, we'll retest these levels, see if there are buyers there, and, we'll explore that level. If we look at the daily, you can see the Q is definitely the hardest hit today. And for me, I was pretty, my portfolio was very cleaned up for today. So I didn't feel any pain from, this NASDAQ move or anything like that. But yeah, you can see this is pretty much a bearish engulfing pattern or a bearish engulfing candle of yesterday's price action. But in the grand scheme, it's just a pullback to this 5-day EMA. So that's why when the market gets this extended, that's where the risk reward, I've talked about this for the past couple days, but the risk reward really becomes very skewed out of your favor. So you'll notice if you entered any positions yesterday that were tech, most likely, depending on where you entered, you're either underwater or under pressure. If you're trading options on those names like short-term calls, you're probably, those calls are probably decimated. So it really just goes to show once you start to get very extended, it can feel like, oh my gosh, we were extended here, but we never went down. Still extended, but we're not going down. But all it takes is, 1 or 2 down days to really flush through, several candles of price action. So yeah, NASDAQ still looking very bullish. Definitely that red candle is not really a good look. And coming on high volume, And you can see we're still very extended as well. If we look at the Russell, you can see the Russell, is showing relative strength today. But even this one really just made another lower high here. So the Russell, I have some long puts in the Russell. And you can see here, again, this is like, here we made a lower high, and then another lower high. So we'll have to see if we get some strength out of these small caps. Really what I'm playing for next week is a push below this monthly this monthly point of control here. But we'll have to see. Yeah, the small caps were never able to jump out of this monthly value area. And if you look here, you can see our Dow Jones. This is our YM ETF or YM futures contract. The Dow Jones never got quite as extended as the S&P 500 or the NASDAQ. You can see it's just grinding higher, and it continues to ride the 5-day exponential moving average. Now, if we look under the hood a little bit here, you can see, so our FinViz heat map, we'll play this from the current slide. Yeah, so you can see when we look at our FinViz heat map, all those areas that have been super flaming hot the past couple days, they had pullbacks today, which is not really out of the ordinary. The one thing I would say is kind of significant is if you look at Tesla, Tesla fell pretty hard today. So if we look, a lot of these reopening names, I was seeing, a lot of traders on Twitter getting super excited about them again. And it's kind of funny because what I noticed when these growth names had this big correction, it was very tough for a lot of traders to really wean themselves off of those names because a lot of them performed so well in 2020. Now it's like, for a lot of these names, we had a little bump higher, and all of a sudden, the love affair with those same names like Peloton, Zoom, all those, it just reignited. Tesla, it tested this Venom pivot level here, and this one also kind of had an ugly candle. So we'll have to see what Tesla does, if it just kind of moves sideways for a couple days, or really what it does here, but definitely not the candle you want to see if you're a bull. So yeah, we had Tesla down, but really all these FANG names were down, all the mega cap tech. So you can see Amazon, this one kind of looks a little bit ugly here. So yeah, Amazon, what it's been doing for the past 6 to 9 months is it'll make a nice advance, then you end up getting one of these ugly bearish engulfing candles, and then it just starts a leg lower. Same thing right here, bearish engulfing candle, another leg lower. Same thing on all these pops. So maybe this time is a little bit different because Amazon's reporting earnings in about 2 weeks. But I mean, if that same pattern holds, maybe Amazon retests this monthly value area high. So we'll have to see. Definitely more to come on that. Yeah, so those names were weak, but then we had, energy, which was pretty strong. The financials are pretty strong as well. Some of these reopening trades. So yeah, definitely a mixed bag. But overall, what I've been seeing over the past week, when you're really looking under the hood, is the breadth has not been very strong. So every day, it's the market has been advancing, but there's been much more decliners than advancers. And that for me is always a bit of a yellow light. So if we look deeper at our sectors here, you can see pretty much every sector that is at the top of our momentum list, took a pullback today. So you can see this XLK technology ETF. I had a position in this one. I closed it out. Software, home builders, medical devices, all of these, they took a step back. And then you can see as well, yeah, this actually got, much worse throughout the day. Yeah, the Coinbase IPO today, we definitely have to spend at least a minute talking about that. So yeah, like I had said the other day, I don't really understand what the hype is around this Coinbase because it's a brokerage business and they charge extremely high commissions. So I would think other competitors are just going to come in and start charging lower commissions. But yeah, it kind of took a dive today. We'll see how it trades though. But yeah, today it was definitely a bit of a sell the news reaction. So if you look at this block ETF, this is the blockchain names down 6.78%. And all the warning signs were there, honestly. I had friends I was talking to that have never invested in crypto that literally yesterday started investing in crypto. I had a couple friends that were messaging me how much money they've made in crypto, literally within the past couple days. So yeah, it kind of makes sense. There's a little bit of a pullback, a little bit of a sell the news, but yeah, it is what it is. And then if we look here, the sectors that were strong, we had biotech up over 2%. We had, and then everything else up a little bit. We had materials up 0.72%. We had regional banks up a little over 1%. Yeah, overall, not looking so pretty on the sector sheet. For our style factors, you can see the momentum and growth style factors really took a hit. And we saw strength in high beta and cyclicals. So this has been like a give and take over the past couple months, where for a while the high beta names were really running with the ball. Then we sort of got this relief rally and growth and momentum, and now they're at the top of the list. So we'll have to see if this becomes another, little mini rotation paradigm shift, or this is just, a blip on the radar. So the risk indicator worked like a charm. So this thing, like I've been saying, I created this, saved it out, really as a result of the last correction of the market. When we get these 4 white candles in a row, typically leads to some sort of pullback or corrective phase in the market. We got the signal yesterday. I made sure everybody, all my members of Pristine Capital knew, like, our guy's looking a little bit weird. I'm going to make sure to just reduce here. And then today we got our first little bout of weakness. Granted, not a lot of weakness in the market. It's just one day. But definitely feels good to be like, okay, I was better prepared for this just because, I put the work into, make a nice risk management tool. So we will have to see. If the pattern holds up, we could have a little corrective phase in the markets here. I'll just be taking it day by day and seeing what happens. Also, with the options expiration cycle, we have a record level of gamma. So all the signs are kind of here where, this pullback, if we do get a pullback right here into next week, it would be like, oh my gosh, every single red flag was flashing. So you can see here, I pointed this out earlier as well, but yeah, this squeeze metrics, if you look at these dealer gamma levels, you can see we hit, record level of dealer gamma. I was looking, so what typically happens when you get this like huge gamma spike, and, we got this one in January. This pretty much marked, a very short-term top in the market, and we had a correction, soon after. And, yeah, so we got the gamma spike. Now the gamma's starting to roll off. We'll have to see what this looks like today. I would imagine some more gamma rolled off. But yeah, come next week, we're not going to have this gamma cushion depending on how things go. So yeah, just another indication of like, not really the time to be like going for it all in. And I think people that were going all in, today they probably took a step backwards. Okay, so now let's take a look. We'll pull up some of my trades for the day. And yeah, you'll see I wasn't really all that active today. So we have for some stock trades, NVIDIA was a name that I had put on yesterday in the pre-market. Closed this out for 610. I had paid 608 for that. Really just as a way of, okay, the risk is starting to manifest. Let me just clean things up a little bit. But NVIDIA in the grand scheme, still looking great, in my opinion. So yeah, bearish engulfing candle here, essentially. This is definitely a name I'm going to keep on my watch list. But we'll have to see if we get a couple more days of weakness. Maybe this one comes in pretty nicely here. It is pretty extended. So yeah, NVIDIA took that one off for a small winner. And then that was the only, common stock trade that I did. And for some options trades, I closed out. I had a Boeing Butterfly. This one I actually got shaken out of. So I stopped out of this one for 431. I had paid 599. This one I would say is like, perfect shakeout. This one really got me. So Boeing, my Butterfly expires this Friday. In the morning, there was a really nice push up in Boeing, and it was on high relative volume. So I was like, this thing might break out. I don't want to be in this bearish Butterfly in case we break out to 268. So I closed out my Butterfly for a small loss. But yeah, you can see this ended up falling apart into the end of the day. If I had kept my Butterfly on, this one could have been a fantastic winner. So that's definitely something I'm going to, look at when I do my trade journaling and just see, like, was there something I could have done better there? Or maybe should I have a rule in place, like, wait until the close, something like that. So I'm going to be thinking about that, a bit when I look through my performance. But, yeah, other than that, pretty smooth sailing. Oh, yeah, so I closed out my XLK diagonal call spread for $5.08. I had paid $3.78. Yeah, this one, that's why I was really a fan of using these diagonals. The diagonals help a lot when you're in a choppy tape. So yeah, we got our first pullback in the XLK. I was like, I'll pull this one off for a winner just to really like clear the deck even more and make sure, hey, if we do get a pullback next week, I want to be in position where I can really capitalize here. So yeah, close down out for a winner. Then the only, opening trade that I put on, I sold the April 30th 41.40 by 41.50 call spread for a credit of $5.40. So I'm risking $4.60 to make $5.40. And this is really just, hey, I'm seeing, this pocket of weakness. It finally manifested itself in the market today. And essentially what that means is just, you can see we closed below, below the levels of both the legs of my call spread today. So essentially, like if we were to get a pullback in the market, say next week, and say it's a little pullback, maybe like 1 or 2%, something like that, a pullback to the 20-day, God forbid we ever retest the 20-day again. You can see like retesting the 20-day is such a normal thing. You can see here in this crazy trending market, even when the market was super strong, we tested this 20-day, a bunch of different times. So like, yeah, if you think like, oh, we're never going to test it again, it's kind of like, in my opinion, it's a little bit naive. I don't know, especially when the Fed's talking about tapering, and especially when we have some of these gaps in the tape here. The other thing too, when I look at the structure, this to me is another thing that really stood out to me. So if I look, I've pointed this out a couple times, but yeah, if you look at this S&P 500, we've been floating higher. Look at how much volume has taken place. How many transactions have occurred at all of these different levels here. And then if you look, since we made this gap higher and just kind of like rolled on from there, there's not really all that much in the way of like market structure here. And that's not like, oh, this is super bearish, like, the market's going to crash now. But it's just like the normal way that price action manifests itself is you don't always just like rip through a level and then you just keep running and, S&P, SPY 500 in a couple weeks. A lot of times you break out, then you retest where you broke out from. Some weak hands get shaken out. Some people that weren't in, they get the chance to jump in. So yeah, I think, retesting 400 on SPY or 398, I think that would be very normal, very healthy. So yeah, we'll have to see. But yeah, so we had that. Yeah, so those were my trades for today. Not really all that much on my end. And then if we pull up our order flow, you can see. So we had some Tesla calls going up in the morning. And this was when Tesla looked like maybe it could have another crazy run. So as call buyers came up, you could see some Facebook, very short-term calls. And looks like whoever bought those, definitely got burned a little bit on Facebook. Let's see. Yeah, so tough go for them. That's all right. It happens to everybody sometimes. And then, yeah, so if you look, we have some puts going up for ARK around 10. More hedges going up for Amazon, for SPY. More Tesla calls. I think they were really trying to get this one going. So you can see these are for April 16th, April 16th. One thing that's kind of noteworthy, I see this Las Vegas Sands, which is a recovery play. And this one had a pretty nice day. Or actually, yeah, kind of closed week. So yeah, even this one, some of these recovery names, like I said, the breadth is not really that strong right now. So depending on what you're looking at, I think that makes it a lot tougher for traders, because if you're in the wrong names, you're in the wrong sectors, it's very tough on the bread this week. It just makes the odds are sort of stacked against you. And then if we look, another name that came up, I'm not really familiar with this name. Oh, General Mills? Is this a Staples name? Yeah, this is a consumer defensive name. Let me see, they bought, I think they bought some calls here too. Yeah, so it looks like for October. And then there's Lucid Motors. This one definitely stood out to me. Yeah, they bought some calls for Friday. This looks like a stock replacement play, like they'll probably just take ownership of the stock. Oh yeah, and then other thing from yesterday, Enthusiast Gaming. I talked about this. I listened to their earnings call. This is a name that I originally entered this one at about like $4.86. And this one is my biggest, stock position that I currently have on right now as well. So they said in their earnings call, we are definitely in the process of uplisting to the NASDAQ. And when I saw that, I was like, yes. Like, basically what that means is this stock is in such a very beautiful bullish trend. I mentioned this in a member video. This one looks like it has the potential to be a super performer and continue that trend. And that's essentially what it's doing here. So the CEO announced, hey, we are uplisting to the NASDAQ. The paperwork is underway, and it's essentially like a done deal. And what that means is there's a lot more market participants that are going to be able to participate in this stock. And it should help with the liquidity here. Because that's the issue here. Like, this was the earnings report. We had, nice surge in buying. But then once those buyers disappear, then you get these sort of like pullbacks and lulls. And it's just never good, trading a very illiquid stock. So that, sent the stock up today almost 17%. So I'm still, super bullish on Enthusiast. My initial target when I bought this at sub $5 was, I think this thing is such a steal below 10. It's like a no-brainer. So that's why I've just kept it as my biggest position. I believe in this stock, especially below 10. I just think it's, really undervalued. So I do think that once we get that uplisting, assuming the market doesn't just like completely crater, I think $10 is very easily in the card. So I'll actually be looking to add to my position on more strength from this name. And you can see this is a new all-time closing high. So awesome news, really pumped. For anybody that's been holding Enthusiast with me, this is really cool. Yeah, so we went through the options order flow. That about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all in the pre-market session tomorrow.